Hey, welcome. I'm back with another video. Today there is Euro USD. I'm going to go through a trade. Yesterday there was a trade, but it was kind of, I missed it. But I'm going to go through the process and how we can potentially take such trades. Basically, this was a little tricky, as there was a minor difference on different brokers. So I'm going to show you how can you set up for a trade, how can you determine bias, how can you potentially wait for your entries. So let's get started. First thing, you go to the daily time frame. As you can see, this is daily low, this is daily high. This daily high has never been broken. That means overflow is still bearish, and we have this liquidity on daily time frame in line with flow. So what that means, that we are just selling based on this liquidity taken, and we have liquidity opposite side as well, which was taken. This could work too, but as this is not in line with our flow, we will use this as in this pullback kind of situation. So let's see what happens here. Forex time frame, price came in, mitigated some block and started pushing up. So as you know, this liquidity is with our inline flow. We have to use some block here where we can potentially sell, right? So we have to find the MSB. So we can see there is no 3H MSB, there is only 2H MSB, right? But the 2H block is way too big. We cannot use this big block. On the 1H time frame, the MSB is normal somewhere here, and we can use the block as the last candle right here. So this was our block, and we can see that price came into our block. It created first double top, it just dropped here. A lot of sellers were there, and it pulled back again. Traders tried to sell it, and then they just took this liquidity. They took all this liquidity, stop losses, and they also taken break even stop losses. They took buy stops as well, and that was there. But you cannot wait for the 4H candle to close, right? So what we do is, when we have already set up this liquidity for ourselves, because if this liquidity is taken, because this is 4H money, if this money is hit, we're going to sell it. So what we do here is we go to the 1H time frame, and basically, as you can see, this 1H candle closed as a red. So this is our trigger. This is probably our first trigger that we start to look for a trade, and we look for MSB and all that. And then again, it just got here, MSB here again, and we have another block sitting up here again. Liquidity taken, MSB and block. This was 4H block. So potentially I'm looking for another pullback into this, and then I'm going to sell it. What happened, they took liquidity here and it tapped into the block, so I instantly went to the 15-minute. As you can see, was kind of, yeah, here probably this liquidity, and the MSB was here, 15-minute MSB, and my block was, I was using this block, 15-minute, and trade was from this level, this block, and stop loss, and looking for first TP probably here. So price pulled back in, tried to drop first, pulled back again, and then was kind of ranging. and I just closed this trade before the close of the day. I knew it's not gonna work out today. Tomorrow we will see it again, and I closed this trade with a minor loss. There was no need to take full loss, right? It actually came back up again. Going back to the 4H time frame, as we can see, 4H fractal being put here. This is kind of double top, so the 4H money is sitting up here, right? People have tried to sell it from here, still have stop losses above, or even have break even or even buy stops here as well. So definitely I'm already waiting for money to hit, and I will be ready already, right? So let's go to the 1H time frame again to see what's happened here. As you can see, first candle closed as on red, so there was no there's no 15-minute MSP. So let's go to the next candle. We can see here closed above, so this 1H becomes invalid. We cannot take this 1H anymore because it closed above, even though they took liquidity, but we cannot trade this candle. So going to the 2H time frame, 2H closed above again, so invalid, cannot take that either. Going to the 3H time frame, as you can see, 3H closed as a red and a bearish candle. So when this happened, you should know that you cannot wait for 4H candle to close, because it can be too late. So let's go to the 15-minute time frame to see what happened there and why I could not take the trade. Let's just remove this. As you can see, we have it determined over high. This is our highest candle, and that highest candle is basically our 15-minute high, and we need to find our 50-minute low, which was right here, right? And it did break this candle, right? So if we use this candle, the time was 16.45, that 15 minutes before the 3H candle closed. So usually what happens when the candle is around like 20-30 minutes before 20-30 minutes, you can just use that candle, because it has already made its move. It's whatever it's gonna do, it's just gonna pull back most of the times. So the 15 minutes before this candle, when it has shifted from bullish to bearish on 15-minute time frame, it's more likely it's gonna stay the same. But what happened there was, I checked this is basically FXCM, and I checked ICM. There was no 15-minute break, there was no 15-minute fractal there. There was this fractal, and this low was actually rated, and this candle was not here. It was actually after this candle, which was the high. So I cannot use that as an 50-minute low. So there was this difference in FXCM and ICM on my broker. I couldn't use that if both were same, because I was watching this, and I could use this one, this block on 15 minutes from the body to the top. The next candle pulled back right into it, and even the next candle also came very close. So how we can potentially use when we have difference in pricing on different brokers, we can go to the lower time frame. As I didn't do that at that time, I was confused. I analyzed later that's what to do in those kind of situations. As you can see, it started from here, it created double top, it took liquidity here, then it took liquidity here. So basically this is over high, right? And if I look low on the 5-minute, which is here, high and low has been taken. So when you are when you're confused and price has already pulled back in, definitely this, if this is the right direction, it's not gonna pull back again to this level. It's gonna come down and have gonna pull back a little low, right? So what to do when this has happened? The next thing you use 5-minute QM. This QM is the range of 5-minute structure. So what you could do is this high and this low, you can use that the next time, because if you use the same 5-minute block or 15-minute block, probably price is not going to reach that block because it has already done that, and there is no need for, I mean, to do that, because you need to be sure that you get triggered. If the direction is right, you're gonna get that trade. If not, you're gonna lose that. That's not the problem. So then definitely just triggered again with this one. There are a lot of taps, but as you know, when you're in the moment, you really don't understand what is happening when you have already missed the trade. I actually was thinking that I probably missed the trade right here when this candle goes up, close, and the next candle became bearish. I was done. Like, this is gone. I cannot take the trade from here, and this, and I didn't set up here. I still tried to take trade based on this body on the 15-minute, like this. When this happened, I don't know why it just didn't get triggered. I was a little low. It didn't trigger, and because when this happened, there is difference between different brokers, and you have missed the trade due to that reason, then you can go to the 5-minute and use that 5-minute QM, which is 5-minute range, bullish range or bearish range, depending on the situation. So this was bullish range, and we could use this whole range from this or from the body. Body is right because it's already big enough, because definitely it's gonna pull back to some extent to this block as well, right? So 3-hour stop loss, and it just tanked and never given any chance to anyone. And because of the Forex liquidity, and to look for the TP, we can look for some next Forex block or next Forex liquidity. So as you can see, this liquidity is taken on the Forex time frame. The candle closed as red. The close as Forex liquidity is still here, but I'm sure that when this kind of liquidity is taken, a wide liquidity, that means there is a lot of money was hit, and then we can expect a little bigger move. So I'm gonna use the next part of liquidity, not this one. So the next is sitting here, right? But when I see there is also rate before this liquidity, so definitely this could stop price for some time, or even potentially start a new trend to the upside. Anything can happen. This is trading. So when you see it, some kind of this situation, what you need to do, you need to just use the block sitting under it, probably 1H or 15-minute. And when we saw that this 1H block was like this, it was big, you could use 15-minute too, which is right here, this block, and even from there to here is 6.56 R. Because of this big 3-pip stop loss, it's not big, but on this trade there was a time when you could have 2-pip stop loss if you manage to get involved early, like on the body to the top, because when 15-minute candle has long wick, you should use the body, and most of the time it is perfect. It's basically 1.6 pip stop loss. Definitely you could use it to the 2 pip, and at one point it was like that. And if you could use that one and still 10 hour, right? And it just tanked towards this low on a 20-hour trade. But as you know, it's not easy. It's very easy to analyze after the trade, because when you are in the moment, there are a lot of things you are worried about. And there was this difference. There was you always have problem with the direction and the flow of the market. So yeah, this was it. This was the video. I hope you got the value, and please subscribe this channel, and I'll see you in the next video.